Alright, so today I took two trades and lost it because I tried to catch the retracement move. Okay, and the trades that I potentially could have taken was okay. So the first trade was the PPI. PPI swept these higher time frame consolidation lows, hit this higher time frame Fairlight gap, and this line is representing a daily low, which is really liquidity. And then in 5 minutes, we broke structure to the upside. So liquidity sweep, break of structure, OTE got filled, and Fairlight gap got disrespected. But why? Because price was going to the optimal trade entry, and then within this price range, I can go to 1 minute to even look for precise entries. Okay, and so my potentially first trade could have been this 1 minute break of structure, stop loss below the lows. And if I waited a little, so this trade there are some drawdowns, and if I waited a little bit, a few more minutes, and then wait for more opportunities, we have this um, we have this inverse gap, Fairlight gap to the upside, and plus optimal trade entry, plus higher time frame liquidity got swept, and then break of structure. So like entry right there, entry right there, and then stop loss below the low, or more risky below the low, and then targeting TP1 could can be this high, and then extension fib levels and the higher time frame equilibrium, which is right up here. Higher time frame premium, higher time frame discount, and if I hold it yesterday, so this would have been a way better entry, but not that. Maybe I must take 50% off at this high, and then rest is just 50, 50, 50, and then go. Okay. And then the next trade that I can potentially have taken is this one. But this is low probability trade. Okay, this is 10 to 11 silver bullet. Okay, price retraced, but price never retraced into equilibrium, and price never swept liquidity. Price swept it here, break of structure, break of structure. Equilibrium is here, but price never hit it, and then just rallied higher to the optimal trade entry from the higher time frame price range. Okay, so yeah, this is all hindsight. And then 5 minute bullish for Fairlight gap got failed. Go to 1 minute time frame. So go to 1 minute. So in a 1 minute time frame, this looks good. Okay, liquidity sweep, 5 minute bullish for Fairlight gap, break of structure, no equilibrium got failed, but there are a Fairlight gap, and then reactions out of it. Okay, entry right there. Stop loss below the lows, and then this is a 5 minute range. So like, or I should pull my fib from this 1 minute, and then TP1 should be this at 1 to 1 risk to reward. TP2, TP3, and then TP4 can be this higher time frame optimal trade entry. So now And then the third trade that I potentially could have taken was this one. Okay, in 4 hour time frame, we broke structure to the upside, but I'm kind of hesitant to buy against all of these bearish sell side imbalance, buy side inefficiency. So I don't want to do that. But 4 hour was bullish, 1 hour was bullish, and in 1 hour we made price made a Ferrari gap, bullish Ferrari gap, and then I tried to cut the retracement move on based off of the 5 minute liquidity sweep, 5 minute inverse Ferrari gap, but and then bearish SMT. I think it's pretty solid confluences to catch retracement, but price end up taking highs on both indexes, on Nasdaq, on ES, and then SMT still hold it and then just dropped into the hourly Ferrari gap. And then from there, what I can take the trades that I could have taken is that 10 to 11 price made 2 5 minute bullish Ferrari gap. Okay, so let me explain why the first bullish Ferrari gap is not valid, because it's above the equilibrium, which is I want to buy, I want to make long position, but this Ferrari gap is above the equilibrium, which makes it um, premium. I want to buy at discount, so delete this box represents the bullish Ferrari gap, and just focus on the hourly Ferrari gap aligns with the 5 minute Ferrari gap. Okay, so there is no 5 minute like break of structure until the very end, maybe 5 minutes, 15 minutes ago. So just go straight into the 1 minute to look for entries. 1 minute break of structure right there. So entry on the close, and and then stop loss below the low. This is for first entry, or wait for it to form, and then price just swept some liquidities, equilibrium, and then rejection higher to the upside, tiring the highs. Yeah, this is the ultimate highs. Yeah. So yeah, these are, so on ES this is different. So there was a 5 minute entry on this. Why? Because let me show you. Moved pretty much the same, but in this example we hit Ferrari gap that in discount, and then also we have this bullish hourly Ferrari gap. So maybe I should wait for this hourly Ferrari gap to get filled and be more patient and look for confirmations on the 5 minute and in 1 minute. Yeah, but in this example, the 5 minute confluences was enough to do my entry on a 5 minute. Okay, why? Because optimal trade entry, higher time frame Ferrari gap, silver bullet Ferrari gap, bullish balanced price range right here, also known as inverse Ferrari gap. Okay, so entry on the inverse Ferrari gap, boom, stop below the lows, targeting these highs and these highs and these highs. Okay, yeah. Now let me go down to two trades that I lost. Um, so I wanted to catch the retracement to the downside, to equilibrium, to hourly Ferrari gap, to silver bullet 5 minute Ferrari gap. Okay, sweep of liquidity, bearish balanced price range, inverse fair value gap, entry right there, stop above the highs. And then when price came back into the drawdown, I thought price may give some bearish SMT to the downside, and it did, but it just disrespects it immediately and and hit my stop loss by a pips, maybe even less than a pips, but then just dropped into 15-minute fair gap and then just dropped. On ES, yeah. So I was expecting to retrace. So the bullish SMT didn't work, okay? And then bearish SMT just swept highs, and then price just continued to my direction. But on ES, I thought like if my short position don't work, I just should buy it. So it's wrong. I should say it like if my short position doesn't work, I should wait for the equilibrium, higher time frame for value gap, and a lower time frame confirmation to buy it. Not just like immediately buy it. That's a wrong thought process. Okay, so I just learned it yesterday. So actually yeah, SMT didn't work at all. SMT didn't work. Bullish SMT didn't work. Bearish SMT broke it, but then like kind of worked. So yeah, that's pretty much it. Yeah. Bye guys.